You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO. This Week in Futures Options, a program where we break down all of the action, lighting it up over there on CME Group. We're going to talk the ags, the metals, the energy, the equities. Who knows? You got to tune in every week. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever compelling, at least we hope so, Options Insider Radio Network, reminding you, wherever you're getting this fine program, keep rating and reviewing. It really does help the onslaught of new folks who are discovering not just the financial markets, but the world of options, and indeed the world of futures options, helps them find their way to our door. We will be their lighthouse in these otherwise stormy seas out there. A lot of crazy stuff going on in these markets, so help those new folks get a bit of a guiding hand. And also keep those questions and comments coming too. I do love to hear from all of you guys and gals out there. And let's see who we're hearing from on the old program today. First off, let's go out once again to the FTSE Russell studios. We are joined once again by Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to the program, sir.
Hey, Mark, great to be back. I'm really looking forward to a great show today.
Should be a fun one, because also on the program, joining us, holding down the CME hot seat, our old friend, Mr. Tim McCourt, the head of equity products over there at CME, as well as a few other things, crypto, and maybe a few other things sneak into his purview as well. AKA, he's a busy guy. Mr. Tim, welcome back to TWIFO, sir, to you as well.
Hey, Mark, how's it going?
There he is. See, third time's the charm. Third time's the charm. Yeah. I knew it. All right, then. With the gang all assembled, let's dive right on into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show we break down what's lighting it up to the upside, a.k.a. the light side, and to the dark side at CME this week. Tim, you haven't been on a little bit. I'll give you pride of place, even though I will warn you, it's a bit of a false choice this week because there's barely enough red to make up a full dark side list. It's 90% green this week, sir. But nonetheless, I will allow you to choose where we begin our journey, sir. Should it be to the light side or to the dark side?
Well, you can't fight the trend. Let's go with the light side.
All right, let's do it there. Yeah, there's a lot of green on the screen this week, listeners. Number 5, to the upside, heating oil. Going to be a lot of energy on this list, I think, this week. Heating oil, number 5, up 4.18%. Number 4, going out to Brent, up over 5%, 5.11%. It was number 4 in the other direction last week, so been a topsy-turvy couple of weeks out there in the energy complex. Remember, we were breaking it down shy of the 60 handle last week, saying would it hang out there? Well, I guess we'll find out a little bit later today. WTI, number 3, up about 5.5% this week. It was number 3 in the other direction last week as well, off 3.45%. Number 2, going out to crypto land, it's Bitcoin. Of course, all eyes in the equity space these days were on the IPO of Coinbase that drove a lot of action, not just in the equity markets, but in the crypto markets, and Bitcoin feeling a lot of that love, up nearly 9% since our last show, 8.96%. It was number 5 in the other direction last week, off nearly 3%. And number 1 with a bullet again this week. So it triumphed and trumped heating oil. It trumped energy. It trumped crypto. It's lumber. Nothing can stop the juggernaut that is lumber, up 9.61%. It was number 1 in the same direction last week, up 6.2%. Again, before you get all excited, 100-odd contracts on the tape. So it's not really an option story we can parse there. I wish it was. People keep asking us, what's up with lumber? I wish we could tell you, but there's just not a lot of options to analyze there, at least not yet. If these things keep happening, if this move keeps happening, I got a feeling we'll see that story change. To the dark side now, what little there is this week. Number 5. Soybean meal off 1.57%. Number 4, live cattle off 1.89%. Number 3, out to the metals, it's silver off 2.95%. Number 2, out to the livestock there, feeder cattle off 4.13%. It was number 4 to the upside last week, up about 2.5%. And number 1 to the dark side this week, platinum, back out to the metals again, off almost 4.2%. It was number 5 in the other direction last week, up 2.5%. So interesting stuff. Let's hit really quickly on the vol movers and shakers as well. When it comes to vol coming in, it's all Bitcoin all the time. If you've been listening to our crypto rundown show, you know Bitcoin vol is comparatively anemic right now compared to where it has been. It's been north of triple digits for the better part of the last couple of years, and now it's in the low 70s, at least it was as of our show on Monday. It might even be lower than that now, given these numbers here, because our top vol decliners this week, the Bitcoin 60-day contract off 3.25%, Bitcoin 30-day contract off 3%, and the Bitcoin 90-day contract off 2.75%. So it's all Bitcoin vol. It's already low, and yet it is still coming in, listeners. And vol advancers, we've got the Dow 30-day up 4.5%, and wheat up 3.5%. There as well. A lot to parse, but we got Tim joining us. We got Sean getting super excited. We got to kick things off in the land of equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, let's do it. Time to sink our teeth into some equities. You know, if we're going to talk equities, we have to set the table with a little bit of vol talk first. And a lot of vol to be found out there. It's moving and shaking all over the place, even though it has come in a wee bit over the last couple of weeks. And let's start it off out there in RVX, a.k.a. the VIX of small caps, a little bit shy of 26 on this coming into today's show, about 25.70, down a little over almost 2.25 points from last show. And as we can all tell, well below that 30 level that it seemed like it was unable to penetrate to the downside for months. It could not break 30, and if it did, it was very short-lived. Now we're hanging out below 30. Is this the new normal? I guess we'll find out. VIX shy of 17 as well, about 1685, down about 0.2 of a point from last show. VIX has kind of been vacillating all over the place since our last show, but also well shy of the 20 handle. A lot of people were watching for quite some time and has been shy of that for a little while now. VVIX at around 107, so back north of the triple digits level. VVIX, of course, the volatility of volatility itself. How frothy, how active is vol right now? And it's moving. And that's up about 7.5 handles from where it was this time last week. And VolQ, a.k.a. the at-the-money vol of the NASDAQ 100, a.k.a. the newest tradable vol product over there at CME land, at about a 20 even. That's up negligible. That's unched from last week, up 0.05. So it's unched from last week. So NASDAQ has been moving around. The vol surprisingly unched. That puts that spread, the small cap to large cap vol spread, at right about 9 points, very close to it, about 8.87. That's about almost 2 points tighter, about 1.9 points tighter than it was last week. So that vol coming in, a lot of that having to do with the RVX continuing to come down a little bit from that near 30 level it's been at for some time. And the VIX to VolQ, so the S&P 500 to the NASDAQ vol spread, at about 3.2. That's actually a little bit wider. That's about 0.75 of a point wider than it was last week. So VolQ staying steady. Obviously, VIX has been bouncing around to widen out that spread out there. Speaking of NASDAQ, Tim, you guys have been busy out there since your last appearance, cranking away on some new products, including you launched something. Every time we have you on the show these days, Tim, you come hat in hand with new products. I love it. And this week, you launched some new weekly options in NASDAQ land. Get our listeners up to speed, Tim. What did you launch, and why did you guys decide to add these to the equity mix there?
Yeah, thanks, Mark. It's always great to be on the show, and I always seem to be on here shilling our wares and new products, but that's because we roll out so many of them.
Yeah, say it's your own fault. You have too many wares, Tim. You got too many products.
Yes. Well, that's because all your great listeners and the customers out there always have such great ideas that we're always trying to help them with their risk management and their trading strategies. So this week is very exciting. Back on Monday, back on the 12th, we introduced E-mini NASDAQ 100 Monday and Wednesday weekly options on futures. So this is very exciting, I think, for a few reasons. One is the NASDAQ, as we've talked about before, continues to be a very, topical trade for the marketplace, certainly with the story stocks and the FANG stocks and things that are out there. It's always something that's been in focus, as well as things like the small cap during the work from home and the extended pandemic environment here. So rolling out more NASDAQ product to serve the marketplace is certainly something that customers want this. What's interesting to note is that this is kind of extending a growth trend we've seen in NASDAQ options at CME, where E-mini NASDAQ 100 options are averaging about 24,000 contracts per day this year, which is up 55% versus last year. Now, what's interesting is NASDAQ's a little bit different than some of the other index properties at CME. We only offered the Friday weeklies in NASDAQ. So we've been working with the marketplace, and over time, as we've talked about on the show as well, more and more trading is getting to the nearer term expiries. Some of that trading volume is really coming into the weeklies. A lot of activities happening in options with less than 10 days to go to expiration. And a lot of the growth that we saw in our NASDAQ complex this year was coming in the Friday weekly options. They're up over 60% this year. So there's certainly more and more demand coming into the NASDAQ complex that we're seeing in the S&P and Russell for that short dated trading. So that's really why we're excited to introduce the Monday and Wednesday E-mini NASDAQ options. Off to a great start this week, some good volume, some good quote quality, and we're just continuing to work with all of our market makers and our platform partners to make sure everyone has the information they need. But really great first week so far.
Yeah, I'm looking at the numbers right now. And actually, Tim, I like having you on the show here because it gives us a chance to sink our teeth into NASDAQ, which you don't always have a chance to do. And you're right. It is a heavy volume. Looking at it right now, it's already at 78,000 contracts so far on the week. And we're kind of just kicking it off here on Thursday. And then B, it's 70% of the paper is expiring within the next week. So in the 3 contracts that go out at 1 day, 4 days, and 6 days to go here, or actually 8 days, there's 4 contracts there. They account for about 70% of all the paper. So everyone loves very near dated contracts here. 55% of the paper this week is going out tomorrow here. So it sounds like, Tim, there's a clear reason why you guys wanted to add more choices in the weekly cycle, because like a lot of the equity products, NASDAQ's just even more stark with it. It seems like all the action, Tim, is very, very near term.
Yeah, absolutely. And I think that's something where when you it's a combination of these themes that we're hearing in the marketplace about that more precision around their timing market events, or as we're heading into corporate earnings season, having that flexibility on Monday, Wednesdays, and Fridays to be able to really express views, especially in something like the NASDAQ where there tends to be more concentration towards the top. NASDAQ options are a great way to manage, earnings related risk. And that's also why, we, if you remember, it seems like a lifetime ago, but only a few months ago, we launched the micro E-mini options. And those are also doing well on the NASDAQ. So this is something that we're seeing in all the NASDAQ products, the futures, the E-mini options, the micro options, where in fact, when we look at the micro NASDAQ options, 8 of the top 10 record trading days since launch have happened basically the last few weeks, like in March, effectively. All 8 have taken place in March and April that are in the last, call it 6 weeks. We've had 8 top 10 days in micro NASDAQ options. So these are proving to be very useful tools. The NASDAQ is certainly of interest. And I think, again, as we head into things like earnings season, these are a great tool to hedge your portfolio, or a way to deploy some really interesting trading strategies to maybe take advantage of some of the opportunities that might present themselves.
Well, yeah, I've said it before. I'll say it again. It hasn't been a better time to launch a even smaller, more bite-sized contract. There's more retail playing in the marketplace than ever. It seems like they want ever smaller, bite-sized type. In fact, I think we have a listener question about that a little bit later, where he kind of have jokes about what length we can get to with the small contracts out there. But you're right, Tim. This is the moment. These small accounts, call them whatever you want. The one lots, the Robin Hoods, whatever you want to call them out there. They're out there in record numbers. And products like this seem to be pretty hot with that crowd, Tim.
Yeah, absolutely. I think it's something that we've seen the marketplace in general, not necessarily just the active individual trader, but we've even had great positive feedback from institutional traders, hedge funds, all the option traders out there really like the smaller size contracts. And then when we look at the continued success of the micro E-mini futures, that's been a tremendous success for the exchange and for the marketplace, and they continue to increase in adoption. So yeah, I think everybody could benefit from the right size, smaller, more precise micro contracts. Just a very useful tool and has broad appeal to all types of customers. So it's been a great development at the exchange.
Yeah, like I said, this gives me a chance to sink my teeth into some NASDAQ action here. You make me break my own rule, Tim, because so much of this action in NASDAQ is going away within this coming week. In fact, like I said, 55% of this week's paper listen, which is already almost 80,000 contracts, is going away in a day. So I'm just going to do it. I'll break down that one-day contract, even though talking skew and vol on a contract like that, it's kind of crazy. But then again, you've got most other months don't get above 10%, so it's kind of hard to really parse them. So we can't really ignore that all the paper is going up in the near term. So will you guys like to play in the NASDAQ 100 contract? Right now, NASDAQ, by the way, if you're wondering, yet again, at or around all-time highs at the 14,000 level right now, 14,006 coming into showtime. The vol out there, that front contract, again, it's going away in a day, so take that with a grain of salt. But 18 and a quarter, that's actually up about 3/4 of a point. The rest of the contracts a little bit more sane, or around a 17 handle to 18 or so as well. You get a little bit farther out. Let's see, skew-wise, again, it's hard to talk about skew with a straight face with 1 day to go. We're going to try it nonetheless. Last week, the puts were 6.6% bid. This week, 9.4%. So puts getting bid up, calls 3.25%. Cheap, actually, this week, 7.25%. And in terms of where the action was this week, not surprising, really, that since I said we just kind of broke through that 14,000 level, it was the 14,000 calls, listeners. They were kind of leading the dance out here this week. The most active day, Tuesday, with about 3,000. Good chunk of that opening, and then the rest kind of scattered throughout the week. So action on, again, an even money strike, not exactly surprising. Also interesting, the 13,950 calls, also pretty active this week, just a hair behind that, about 4,500 and change. So very relevant in the money to at the money strikes, kind of leading the dance out here in NASDAQ land. Tim, anything else you want to hit on with NASDAQ before we roll on into all things small cap, sir?
No, I think that's great. We got lots of stuff going on in NASDAQ. It's going to be a continued fun complex to keep our eye on here as we head further into Q2 here in 2021. And just encourage all those listeners out there to keep up the good work in the NASDAQ. Certainly appreciate what's going on from an adoption and a growth perspective. So keep up the good work, everyone.
They're certainly trading it, and more the merrier, and the smaller the better, it seems like, are the two narratives out there in NASDAQ land. You know, small caps have also been having an interesting narrative of late as well. I do believe I have a listener question about that a little bit later too. Mr. Sean, I'm sure you, the folks over there at FTSE, have been pretty busy watching all this action in small cap land. Coming into showtime, small caps at about 22.54, up about 0.75% net on the week here. So, Mr. Sean, what's been lighting up your tape out there in all things small cap, sir?
Well, again, thanks for having me on the show, Tim. It's always a pleasure to be on with you. I still recall that in-person last meeting we had in warmer weather down south, that the three of us were sitting around a round table.
In that hallway, yes. We commandeered a hallway at Boca, yes. Turned it into an impromptu studio.
It was fantastic. But yeah, the small caps continue to outperform, right? So as of April 14th, the year-to-date performance of small caps over large caps, and I'm using Russell 1000 as my large cap example, but Russell 2000's up 14.1%, large caps up 10.1%. So small caps continue to outperform, which brings attention to our derivatives contracts, which trade at our partner exchange, CME Group. And, your Q1 numbers were fantastic, Tim. Congratulations. First of all, record volume just in March in your micro E-mini 2000 futures, right? Over 200,000 contracts a day in March. Just fantastic numbers showing liquidity. Q1 of this year over Q1 of last year, up 138, almost 140%. I mean, the numbers are just fantastic. The growth is phenomenal, but it's you gotta look at the index itself, its performance, and the opportunity to take a voice or take a stand in that index, and where else to do it but with CME futures contracts. It's fantastic. The liquidity is great. Open interest is very, very strong, up around 600,000 contracts strong. That's combining both futures and options. Our partner exchange Cboe recently launched mini rut options. They're doing well. So small caps are full of attention and continuing to get attention. Yes, volatility has come in, but as the index stays strong, not surprising to see the volatility coming in. But again, small caps are a more volatile index, so it's just very interesting to see the trade.
Very interesting indeed. You know what else is interesting? I do believe the last time you were on the show, Tim, we premiered a new transition just for you and your other hat you're wearing over there at CME. And it's kind of all the talk of the town these days. We can't avoid it. So let's head next into crypto.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
I love it. We get to use the new transition once again. Yeah, let's sink our teeth into it, listeners, because it's hard to describe how much action there's been. I mentioned at the top of the show, of course, Coinbase really fixating everyone's attention, even in the equity world, on what's been going on in the crypto markets. Of course, they've been exploding ever since the beginning of this year. And Tim, it doesn't seem like it was that long ago, but you were on with us 2 months ago because that was around the launch of the ETH futures. And now we've got 2 months of ETH data under our belt. And let's start there because everyone's talking Bitcoin, but it sounds like the ETH futures are kind of the surprise success story over there in crypto land at CME, Tim.
Yeah, no, for certainly. I mean, I'm not surprised. I was always a believer, but it's been a great first 2 months for Ether futures at CME. Doing just about 1,000 contracts per day, which has been great. And when we look at that, that's about, since this contract has a 50 Ether multiplier, it's talking about doing between 45 to 50,000 Ether equivalent per day, which has been fantastic. It's off to a really good start. We're seeing what we always like is open interest and ADV, lower left to upper right on those charts, just kind of increasing the use case every day. And it's been a lot of fun to see this embraced by customers. And I say that because what's interesting is, we have the Bitcoin suite at CME for over 3 years now, but there are clients and there are market participants out there that kind of just like to trade Ether. Not everyone is always trading kind of the undisputed king of crypto, Bitcoin, Ether is the number 2, has its own fan base, its own distinct use cases. So it's been really great to get some new participants into the crypto markets and into our markets in general, it seems. So it's been a lot of fun to watch either futures take off, as well as some of the price action that we're seeing in Ether. It's certainly a very interesting trading opportunity and a way to use futures to access the market.
Yeah, you guys put out a report here. I'm looking at some of the highlights now. It doesn't seem like it's been 2 months, but already 2 months under our belt for Ether. Hit 2 new records on April 7th, volume at 2,247 contracts. That's 112,500 equivalent Ether, and OI at about 1,822. That's 91.1 thousand equivalent Ether. Other highlights, 34,000 plus contracts traded total. 1.72 million equivalent Ether, averaging 820 contracts a day. That's a lot for a new contract out there. That's 41,000 equivalent Ether. And 36% of overall volume coming from outside the U.S., which, again, that doesn't surprise me, given just the traction we've seen for our crypto show and how many of the guests and how many of the listeners for that program come from overseas. It doesn't surprise me. If anything, I'm surprised that number isn't even higher, just because of how much international interest there is in these contracts. And speaking of interest, Tim, one of the drum beats we've been talking about for a while here is, when is Bitcoin and when are the Bitcoin options really going to turn it up? When are they going to tick up? It seems like this week, maybe the Coinbase IPO, the big move in Bitcoin, whatever it is, this week seems to be one of the hotter and heavier weeks we've seen probably ever out there in Bitcoin options. Already about 280 contracts on the tape. It may not sound like a lot, listeners, but A, that's a 5X contract, and B, that's more than double what we've seen in other weeks lately out there, Tim. So is that your takeaway as well? It seems like this big move in Bitcoin driving some action out there in the Bitcoin options, Tim.
Yeah, absolutely. I think when we look at it, certainly crypto is a very topical conversation this week. And you're right. When we look at doing almost 300 Bitcoin options so far this week, that's more than triple kind of the Q1 ADV that we're seeing, right? So it's certainly an order of magnitude of several X increase, which is great to see. And we're seeing some good dispersion across a few of the strikes. People are using it for various reasons. And I think when we look at certainly the price movement of Bitcoin reaching circling around, reaching new highs in the week, that it always, I think, increases the curiosity factor, attracts new participants to allocate some of their trading capital to crypto. We're seeing great things in Bitcoin options. And I think this is a great backdrop for us as we get ready to launch, micro Bitcoin in just a few weeks.
You kind of jumped to what I was going to hit on next there, because, of course, one of the other things we've been talking about for a while is this big contract may be a little bit intimidating for a lot of the retail masses out there. We've been talking with equities now for a while. Everything small is big. So it seemed like only a matter of time till we got something a little bit more bite-sized in the crypto space from CME. Sounds like you guys are finally doing that. I know you're coming on in about a month or so to talk about it, but let's give the listeners a preview now. What can they expect coming soon in the bite-sized crypto offerings from CME, sir?
Yeah, for sure. Very excited on May 3rd. So Sunday night, 6 p.m. Eastern on May 2nd, with the start of the Globex session, we'll introduce micro Bitcoin futures at CME. They will be worth 1/10 of 1 Bitcoin. So even though we're having great volume and growth in the current contract with Q1 ADV, about 13,500, and open interest continuing to grow almost 11,000 per day on average for the quarter, at these prices with Bitcoin, that's now a $300,000 plus contract. That's a hefty contract in terms of use of capital, as well as being able to precisely hedge things like options or other positions in the market if you're trading any of the other Bitcoin kind of structured products or OTC or kind of some of the unregulated products that are out there. So the micro contract is 1/50th the size of our current future. So it's going to be about a $6,000 contract notional. It's just 1/10 of Bitcoin in terms of the contract value. So it's going to be much more precise. It's going to allow you to be flexible in terms of how you're using it, scale in, scale up, scale down, hedge options, hedge other products. And it's going to be complementary to those already trading the older sibling, big brother, 5X Bitcoin contract. And we think it's going to really bring some new participants to the market who have been waiting in the wings, curious, designing their strategies, and now they can start to kind of test them out in production, so to speak, with a much smaller contract and ease into the market. So it's also going to remove some of that barrier to entry where the $300,000 contract is just a little too large to deploy some of these strategies.
Yeah, the price action hasn't been your friend on the Bitcoin side. It continues to explode upward, making these 5X contracts more and more expensive. I'm very excited to sink my teeth into those and see what the audience sinks their teeth into when it comes to the more bite-sized Bitcoin contracts. But like I said, there is some action actually lighting it up on the big contracts here this week. Coming into Showtime, 63,175 is where Bitcoin's hanging its hat. I mentioned earlier that vol was in the low 70s. It might have broken into the 60 handle, and that front contract is at a 68.11 right now. So that's a lot of vol for, let's say, a typical equity, like, let's say, an Apple or a Facebook. But for Bitcoin, which has been well north of triple digits for a lot of its run, that's actually comparatively light. And so that's interesting to watch. One of the narratives we've been saying for a while is, when will Bitcoin vol rebound? And this week, at least, the answer is no. Look at our vol decliners. All three of them, all the leading ones, were all the Bitcoin contracts. So vol is coming in. That may surprise a lot of people who are used to, the traditional equity type mindset out there. And a lot of movement usually translates to volatility. And yet, right now, like I said, we're up 4,400 points on the week, and vol is in. Yet again, in terms of where the action was, 78.5% of it coming in that front contract. Has about 15 days to go out here, that front April contract. And the most active contract, surprise, surprise, was the 60 puts. We had 63,000. That's not exactly surprising. In fact, even listening to our Crypto Rundown show, Bitcoin, traditionally, the options have been mostly biased towards calls, particularly as you get farther out in the term structure. Of late, with all this bouncing around we've seen in Bitcoin, we saw some aggressive sell-offs last week as well. The puts have been coming much more in favor. In fact, on our Monday show, they were pretty close to 1-to-1 in terms of OI out there, in terms of interest in calls and in puts. And now the 60 puts are even leading the dance over there, 60,000 puts, I should say, on CME as well. So puts becoming more in fashion. It's kind of hard to argue against them. These lofty valuation levels, you can't fault someone for wanting a little bit of protection out there. So interesting stuff to watch. We'll keep an eye on that. We'll certainly keep an eye on these mini contracts that are coming soon as well. But we also talked about earlier in the show, energy is pretty much dominating all of our light side this week, pretty much outside of lumber and Bitcoin. All the rest was energy. So let's hang our hats there next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, let's do it. I got so excited at the start of the show, I forgot to mention where you can find these reports for yourselves. CMEgroup.com/TWIFO, TWIFO, or /TWIO. Both of those should work. They'll get you to our This Week in Futures Options report, where you too can follow along. If you want to check crude oil vol at 2 a.m, be our guest. Those links are always live and ready to go for you folks out there. If you want to find the energy, just go into the drop down, choose energy. We're going to king our hats right now in WTI. Coming into Showtime, we find it at about a 63.40, so about almost 3.5 handles north of that 60 handle that it was below last week. Of course, some news coming out there on the OPEC front and IEA in terms of their analyzing of inventories out there on the supply side, giving a little bit of a boost to energy out there. Up exactly 4 points, actually, from the start of this week, 4.04 to be precise. And let's see. So we're looking at a 63 and roughly a half out here. And in terms of where the action was this week, nearly 43%, 42.9% coming in the June contract that has about 32 days to go. The vol out there about 32.40. That's off about 2 3/4 points from last week. So still frothy. It also gives you a sense of how much vol was out there in Bitcoin. If it's coming in, and it's still north of a 60, and WTI is roughly half of that at about a 33. Gives you a sense for how high that 66 vol still is, even though comparatively, from a historical perspective in Bitcoin, it's somewhat low. In terms of skew action out there last week, the puts were 7.6% rich to the at the money. This week, 9.6% rich. The calls last week, 4.2% cheap. This week, nearly 7% cheap, 6.8%. So puts getting bid this week, calls getting more offered. That tends to be what we've seen when we're hanging out north of the 60 handle. The skew tends to fade that for too long, but yet the underlying is moving firmly out there this week to the upside. Let's see here. The most active strike, again, we kind of are at about a 63.5 right now. The most active option was the 70 calls here in June, doing about 14,000 contracts. By the way, if you're wondering, 384,000 contracts on the tape right now in WTI so far this week. The 70 calls leading the dance, 14,000 and change. The big day was yesterday, 7,300 contracts. It's like a lot of back and forth. It was only slightly closing, so a lot of back and forth action on the 70 strike yesterday. Today, about 5,000 on the tape, 1,300 on Monday, about 1,000 on Tuesday. And then behind that, we have what looks like the 57 puts, so all very close to that 60 strike there, doing about 12,000 contracts so far this week. The big day was Wednesday, 5,400. Today, about 4,200. Actually, yesterday was actually a decent amount. Over half of that was opening, so a lot of opening paper on the 57 put strike yesterday. That could account for some of that action we're seeing in that put wing out there. Then we go a little bit farther out. We got kind of a bit of a tie here, close to it. Double puts doing about 10,700 contracts. And then the 70 calls in July doing 10,400 contracts. So interesting. A lot of action on that 70 strike as well. That would have sounded outlandish a few months ago. Now it isn't that far. It isn't that far down the road anymore. That's right, 63.5 coming into showtime. But of course, it wasn't all upside all the time. There was a little bit farther out there. Let's go out to June of next year. 45 puts doing nearly 5,000 contracts on the tape this week, and the 50 puts in Dees of this year doing nearly 9,000. So there's a fair amount of downside action on the tape, even as we're talking about this 70 strike out here in the not so distant future. Let's look around really quickly, see some other ones lighting it up. Platinum we can't really do because 61 contracts on the tape this week, listeners. So not exactly a ton of action out there in platinum, but we do see silver, number 3 to the dark side, off nearly 3%. Haven't had a chance to sink our teeth into the metals in a little bit, so let's head out there next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals. Gonna head out to the silver stuff, the other shiny metal out there. You guys can find this for yourselves. Go to that drop down, go to metals, go to precious, and pull up silver, and you'll be off to the races. Coming into showtime, 25, almost 26, just a tick under the 26 handle there, up about 2/3 of a point, or about 2.6% here on the week. Remember silver not too long ago, everyone was talking about, is this going to be the new squeeze? Can all the Reddit kids drive up silver? We talked on this show, many others on the network. Silver, a different beast than GameStop. Not as easy to, shall we say, squeeze, and it didn't really materialize. But a little bit of upside on the tape so far here this week. In terms of where the action was, and by the way, that action, about 25,000 contracts close to it on the tape so far this week. And about 44% of that coming in the May contract that has about 12 days to go. So we'll make an exception to our 2-week barometer for analyzing vol and skew. The vol, by the way, at about a 25.3, up about 1.5 points. So that's a decent level of vol for silver out there. In terms of the skew, the puts last week, 2.9% cheap. This week, about 2.5% cheap. So not a lot of movement on the put front. Let's look at the calls. 4.3% rich last week and 4.5% rich this week. So not a lot of movement on the skew in either direction. Puts slightly offered, calls slightly bid over here in silver land. I guess that makes some sense given the price action we've seen out here of late. In terms of where the action was this week, I said we're at about a 26. This is not the strike I expected. The 45 even calls in May, doing about almost 1,000 contracts this week. All of that pretty much today. So that's not the strike I expected at all. And that could maybe get back to what we were talking about earlier, some of that, shall we say, outlandish squeeze type paper here. 45 strike in silver. It would take a lot for silver to go from about a 26 to a 45 by May expiration. But that's what we're seeing a lot of paper lining up on today. It's like a bit of a vertical may have gone up here as well, the 26.5, 27. But that doesn't seem like it's on a ratio with this. And there's a 34 calls active today as well. But again, none of them really lining up from a ratio perspective. They did about 280 of those. Yeah, that's a strange one. The 45 strike, that's not what I expected to be dominating the tape out here this week in silver. But again, maybe some shadows of that squeeze action. If that's not enough, right behind it, the Dees 50s, 5 O's, doing 623 contracts. So not that distant. Number 2 are the D50s. This is bizarre paper, to say the least, out here. It looks like there might have been most of that went up on Tuesday. About 300 of that went up on Tuesday, 281 today. Today, there might have been some verticals. The 35, 40, 50 went up maybe close to 300 times, 250 to 300 times. But on Monday or Tuesday, only 300 of the 50s traded, nothing else traded. So it wasn't all ratios. Someone has been playing on the 50s all week. So these are aberrant strikes, to say the least. I'll have to get my cohort there, Mr. Uncle Mike, who trades a lot of silver, to get his thoughts on this on next option block. All this upside paper in silver. Again, not what I expected coming in here. I expected a lot more near at the money strikes. But again, this could speak to some of the interesting and somewhat outlandish paper we've been seeing flocking into silver of late. Speaking of interesting and or outlandish, your questions tend to fall in those categories as well. You got a lot of them this week, so let's get to them. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your feedback segment. You guys are always hitting us up, questions, comments, maybe a product category you want us to break down on the show. You know where to find us, at Options, on most of the major social media platforms. If you're listening live, we tend to bump your questions up to the top of the list. Let's kick this off. Tim, I was good. I did not ask you this question today, but our listeners did it for me, so I didn't have to. The next question here is from LTC87 saying, loving the show, learning a ton. Well, right back at you there, LTC. We love all of our listeners over here. He says, do you think we'll see a mini Bitcoin or Ether option anytime soon? Well, he's getting ahead of us on the Ether front. We don't even have the mini Ether yet, but we have the mini Bitcoin coming soon. So, Tim, our listeners want to know. They always want the options. They want to know when they can expect the options, sir.
Yeah, great question. Right now, I'm just continue to focus on getting micro Bitcoin out there on May 3rd, but engaging with clients and market participants just to make sure, this is the size problem is not unique to the futures. So we're keeping our eye on it to see if the futures help abate some of that need for the smaller, right size, more precise contract. And since these are options on futures, we have to always have the future first. There has to be some sort of minimum viability of the future before we can introduce options on it. So keeping our eye on it, but we're hoping, and I expect the futures to be a strong success based on what we're hearing so far. So I'm sure we'll be looking for more specific feedback on if options make more sense, probably shortly after May 3rd.
See, Tim, it's not just me. I'm just expressing the will of the people. As I've told you before, I am their mouthpiece here. Right. I am the mouthpiece here on the show.
You're just a conduit. You're just a conduit.
I'm just a puppet of the people here at the end of the day. All right, next up, another one for you. This is, I like our listeners. A bit of a humorous tend to them, which I like. This comes from J. Mark. He says, seems like everything small is super hot. Makes me wonder if next we'll see something smaller than a micro. He says, are super micro futures / options on the horizon? All right, so Tim, we've got minis, we've got micros. J. Mark wants to know, are super micros, are they on the horizon, sir?
That's a good question. I like super micros or maybe nanos. I think nano is smaller, right? I
like that, nano. You can do some good branding around that.
Yeah, that's trademarked right now. You heard it here first. No, just kidding. It's a good question. I think what we'll look at is we look at lots of things in the product development life cycle. We certainly haven't had any conversations about going smaller than micro. I think, we have a handful of micros out there in equities, metals, FX, and now soon to be crypto. So I think we really need to focus on these taking root. But the general theme is through either let's call it more passive phenoms like equity prices rising or Bitcoin prices rising, or trying to offer a smaller, more precise product to offer more choice and bring in more participants. There's lots of different motivations that make sense, and we'll continue to evaluate which products might be right or appropriate for a micro contract. And then if that gets too large again, we might be having this conversation again. But it's really about just making sure from a capital perspective and the ability to deploy strategies that it works for as many people as possible. So I would say just keep the feedback coming. I can't guarantee we're going super micro anytime soon, but we'll always look to and focus on doing what's right for the marketplace and for the clients out there.
I like the nano. I think you can do a lot with the nano branding out there. I think that would get some traction out there. Of course, if you go super micro, I guess you have to pay our listener J-Mark here first. I'll have to see if his
That's right.
He came up with this first. His licensing rates, we'll see if they're pretty reasonable out there. All right, Sean, we've got one here from you from Eddie. Maybe he's past tense Eddie, or maybe he's just Eddie D. He says, I have a question for Sean. The small caps surge seems to have hit the brakes. Do you think inflation fears could be the cause? Sean, this is something we've been talking about on the show really since our election special last year. That's when we saw November of last year is really when we saw the small cap explosion just kick into high gear. And it's carried pace throughout most of this year as well. Like he points out, kind of taking a bit of a breather these days. What are your thoughts? You're always talking with all the research and analyst folks over there at FTSE Russell as well. What are you guys hearing you think could be behind the bit of a pause he's seeing out here in terms of the small cap surge, sir?
Well, Eddie Diaz, a great question. And boy, wouldn't it be great to have Eric Norland on for a little bit of his economic view here, or
I don't know who that is,
CME Group,
but he's not welcome here.
We'd love to have them, but last week producer price index came out, and it was higher than expected, and it's producer prices is up. I think I saw 4.2% for the last consecutive 12 months. So the I word is rearing its head a little bit, but I wouldn't say hit the brakes. I'd use the word pause. Again, I'm not forecasting where the index from a value perspective is going. It's fantastic. There's trillions of dollars benchmarked to the Russell suite of product. Inflation, could it have caused this pause or this slow of the rally? Absolutely. It's a domestic index by nature. So U.S. economic numbers are going to dramatically affect the movement of the small caps here in the U.S. So, it definitely probably had some effect. But again, I'm not going to forecast where this index is going. And, Tim, the volumes in the CME products just speak for themselves. And regardless of the direction, customers seem to have just a fantastic experience trading the product at CME Group. I don't know if you had any comments you wanted to make there.
Yeah, absolutely. I mean, first, one of the things that, Sean, and we've talked about this a few times this year when we've gotten together virtually is I think the theme for 2021 continues to be that index choice matters, right? We're seeing meaningful price divergence between the S&P, NASDAQ, Dow, and Russell, right? When we're looking at Russell too. So the index choice matters. And I think small caps remains a very important space in the backdrop of what's going on in the economy, what's going on in the markets, what's going on with legislative agendas out of Washington. So I think we're going to continue to see it. And, through Q1, Russell 2000 has certainly been, Sean, to your point, a bright spot from volumes, right? Where when we look at it, the E-mini Russell 2000 futures are up, between 9 and 10% versus full year last year. And what makes that impressive is, when we look at some other things like the S&P, some of those E-mini volumes are down compared to last year. So on a relative basis compared to its peers of the four majors, Russell 2 is the E-mini that's grown the most from a volume perspective. And the micro Russell is up 100% versus last year full year. It's double
fantastic
Q1. So people are certainly getting involved. So I don't know if people think that the brakes are being tapped or the pause is happening. It might be warranted. People need to catch their breath a little bit. Like they've been trading this a lot, and we're still seeing very strong volumes. So a little bit of a breather. Not necessarily a bad thing here, but I think the Russell 2000 is going to continue to be a very important index and product suite as 2021 continues.
People have just been spoiled by movement in these indices. So we got a lot of people writing in to the network who are new to the markets and they just expect, volatility to be north of 30. They expect indexes to swing 20 or 30% in a month. These are just normal things to them. And so the notion that it's not doing one of those things right now is to them pumping the brakes. But you're right. I mean, the amount of outperformance we've seen of Russell 2000 versus the other major indices since November, I think the technical term is ridiculous. It needs to take a bit of a break. I think every product, they can't just go 20% at a clip, week after week, month after month. Eventually, things have to take a pause. So it'll be interesting to see if this continues. Eddie D, volume-wise, it's been interesting to watch what's going on out there in Russell 2000. We have been talking for a while. We had Matt on last week talking about the quote-unquote small delta calls, particularly around that 24 half strike in the Russell 2000. There seems to be a lot of action there still. And Matt mentioned even last week on the show that his skew indicators, he's been studying small caps a lot of late as well. And his skew indicators show that, and we've reinforced it, talking about it here on the show as well. There's still a lot of interest in that small delta upside range of the Russell 2000. So pause or not, there's still a lot of interest in these very far out of the money strikes. So that'll be interesting to see how all of that coalesces in the near future. See, next up, we've got, listen, we can do this one quickly. This comes from Nate. I'm nice to you folks. You asked for a product, even though we did energy already. Nate says, how is Nat Gas holding up since it's been cooler the past couple of weeks? Well, you know what? We're nice here on the show. Ask and you shall receive here, Nate. Go to the energy drop-down, listeners. Move past WTI, go to Nat Gas, and you can look for yourselves there. By the way, about 219,000 contracts on the tape so far this week. So actually a bit of a light week for Nat Gas, even though it was moving quite a bit. At about 2.665 coming into showtime, up about 5.5% here this week. So actually a little bit of upside. We were talking about Nat Gas and the seasonality of it on the show last week. Got a little bit of upside here this week. In terms of where the action is, this is kind of like an equity. All the action, 43%, is in that front May contract that's going away in 12 days. So not quite a weekly, but not that far beyond it. So we'll dive in there, even though it's not quite at our 2-week barometer there, listeners. The at the money vol and Nat Gas, about 30.67. That's actually off about 2.15 points. So a little bit starting to threaten the 30 handle to the downside there. Nat Gas, if you've been watching it, it's a pretty volatile contract. So interesting to see that vol come in a little bit. In terms of the skew, last week the puts 4.9% rich, so a hefty bid to the puts. This week 4.3%, so that bid coming in a little bit. The calls 3.5% cheap last week. This week 5.5% cheap. So calls coming in and puts coming in a little bit, which is kind of interesting. Again, the vol coming in a little bit too. So that's certainly driving some of that. In terms of where the action was this week, like I said, we're a little bit north of that 2.5 level, about 2 2/3. The 2.5 puts in the May contract. So going out in a couple of weeks, we're dominating the tape here with about almost 13,000 contracts on the tape this week. The lion's share of that coming actually today, about 5,400 going up today, 3,000 on Tuesday, about half of that opening, 2,200 on Monday, a little bit of that opening there. So a lot more back and forth on Monday. So action on the 2.5 strike, which again, aren't that far from that and kind of just rallied away from it. So not exactly surprising to see that that's where the action was this week. Let's look a little bit beyond that because obviously so much of the paper came in this May contract. See if anything else of note was going on. Right behind it actually were the 2 3/4 calls, about 12,600 contracts. Again, today, the big day, 6,300 of that 12,500 going up today. So pretty much half of the paper this week going up today. Then about 2,600 yesterday, 2,200 on Tuesday, and about 1,400 on Monday. So active time here for the 2.5 puts and the 2 3/4 call. It's kind of a very tight strangle, if you will, going on out there. Interesting stuff here. Those are probably some of the strikes I would have expected, but still decent amount of size. Also interesting to see what's going on with the vol coming in out here. So perhaps, is this what you expected here, Nate? Is this how you thought Nat Gas would be holding up? It looks like it's holding up fairly well, given the fact that it's come off a little bit, but now, again, back up here this week is kind of catching the bid that all the rest of the energy had here this week, even though Nat Gas was not in our movers and shakers to the upside. But part of that is just the fact that there was so much upside on the screen this week, listeners, that it took a lot. You had to be north of 5% to break into our movers and shakers this week. Hopefully that gives you a little bit of an update of what's going on in nat gas, if something else you want to know about, some specific strikes, some specific trades, hit us up. We're nice here on the show. As long as there's time, we'll let you have your product, as long as there's some options trading on it too. Speaking of time, let's wind it down with this one here. It comes from Bartholomew. He wants to know, have you thought about having the show do a full rundown on each of the major complexes at CME this week? So you hit ags, then metals, energy, equities, etc. Just a thought. Love the show. Yeah, we have thought about that. We thought about a lot of things with the show. Problem is, A, it's a 1-hour show. B, we usually have guests who usually specialize in certain product categories, and so we want to talk about those. And so that's why we came up with the movers and shakers report, because there's just not enough time to break down every complex that's trading over there. You can't, like this week, there's not a lot of ags on the upside, so it wouldn't make sense to put them in the rundown this week. So that's why we do the movers and shakers report. It helps for you guys out there to kind of consolidate to see what is actually moving this week. So what's going to make it onto the show, probably, given what's been lighting it up out there. It doesn't make sense to do lean hogs every week when there's not much going on out there, or the same thing. I wish we could do lumber, but there's not a lot of paper out there. So it would be nice. It'd be fun if we had like a 4-hour show every week. We could hit everything, but we kind of have to pick and choose to make it come in under an hour. And so that's where the movers and the shakers come. But again, Bartholomew, if you have a product you want us to talk about on the show, hit us up. If there's time, we'll usually see what we can do. And speaking of time, unfortunately, we've come to the end of ours here on the TWIFO program for this week. Man, an hour flies by when you're talking some equity, some crypto, some energy, and a whole bunch of other fun stuff here. But before we go, Tim, you already kind of hinted at what you have coming down the pike for our listeners, but we like to always leave them wanting more. So if they want more information on what you guys are working on, maybe you want to leave them with some hints or some teases of what you folks have up your sleeve, Tim, now is the time. The floor is yours.
No, thanks, Mark. The Monday and Wednesday NASDAQ options keeping us busy in micro Bitcoin, launching on May 3rd. So I just encourage everyone to go to cmegroup.com. Plenty of resources, both on the educational front as well as the product front. And just in case I don't make it back on the show and we roll something else out, you can always go there to subscribe for product updates and product emails for launches and just general updates. So I just encourage everyone to go to cmegroup.com and check things out.
There you go, cmegroup.com. While you're at it, head to cmegroup.com/TWIFO. A great starting point. You can get these reports and everything else we're talking about. So if you have questions, maybe you don't want to write into the show, you don't have time to write into the show, you can check it for yourself. If you want to check out Fluid Milk at 3 a.m, we won't judge. cmegroup.com/TWIFO is the place to go to begin your journey. And Sean, if folks have questions about all things small cap, and clearly they do, where should they go? What should they do, sir?
Mark, thanks for having me on the show. Tim, always a pleasure to be on the show with you as well. Really enjoyed today's discussion. Go to FTSERussell.com. It's got all the information you want on all of our indexes, our global products across the board. FTSERussell.com. And of course, you can reach me at sean.smith@lseg.com as well. Great show, Mark. And Tim, thanks again. Really great having you on the show.
Yeah, Sean, always good to catch up with you. And Mark, thanks again. Great show, as always.
There you go. FTSERussell.com is the place to go for all things small cap. And on behalf of Sean, everybody over there in FTSE land, and Tim and his very busy team over there at CME land, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great and often hilarious questions. Keep them coming. And we'll see you back here tomorrow, noon Central, 1 p.m. Eastern, for Volatility Views. Then it all kicks off again on Monday with the option block all the way through to Thursday, and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/CME. FTSE.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.